Forward. Hello guys, welcome to today's video. I am joined by Chief Market Strategist over at In the Money Stocks. This is Gareth Solloway. Gareth, say hello.
Hey there, Ben. Thanks for having me today.
Good. I'm very glad to have you on. I know you're a hard man to get hold of. Everyone's a big fan of you, Gareth. So what we want to cover off today is just going through, I guess, your view on the overall markets. What is it that you see going on? I mean, firstly, let's take a look at crypto. There was a huge drop. Yesterday saw quite a bit of recovery. I know that in speaking to you before, you had actually called this drop. What led you to analyze and come up with this? Should we call it some way of a prediction before it happened?
Yeah, so that's a great question because everyone wants to be able to call major moves in the stocks or markets or crypto here. The things I was seeing in the charts, multiple fold. Number one, over the last, basically the last 2 to 3 weeks in crypto, you started to see lower highs and lower lows. And as we most know, that is a bearish indicator. Once you can't be, if you see any chart and it's making lower lows, it's definitely telling you there's distribution going on in the chart. So that was an indicator right there. I also thought that the hype had gotten extreme, whether it was Elon Musk going on Saturday Night Live or various other things going on. It was just ridiculous how crazy it got. I mean, to the point where my UPS driver delivering my Amazon packages, he was buying Dogecoin and all these type of things. And I've traded through lots of bubbles, 1999 with the dot-coms, 2007. And those are the same exact things that I remember happening back then. So the indicators were there. And then it was also noticing a head and shoulders pattern on Bitcoin. And Bitcoin broke about 3 to 4 days ago, that head and shoulder nut line. And you can calculate the exact target based on the high pivot of the head down to the neckline. And then when it breaks, you do a measured move there. And sure enough, it had a calculated target of 30,000. And that's exactly where we went on Bitcoin. I had an order out to buy just above that. I bought and I already sold for a $10,000 gain on Bitcoin just, in the last 24 hours. So really a remarkable move to target and a big bounce. And then ultimately, I think you're going to see some potential further upside, but I do think down the line, there's another move down into the 20,000 range.
Okay. So a big part of what you mentioned there is kind of buy the rumor, sell the news. And obviously, when you get to the point where every man and his dog is recommending that you buy Bitcoin or any kind of crypto, what's your opinion on the other altcoins? Because we saw pretty much across the board, everything had a slump. So was there something slightly more fundamental in the market? Was it just a case of, buyer sentiment and the smart investors taking profits?
Yeah, I mean, I think it was smart money realized the overbought situation, and then it all coincided with, what China did, which is basically trying to ban cryptocurrencies. Basically, China's, and this is focusing on their digital yuan, and they're looking to make that the new reserve currency of the world. And so they want to get rid of the other potential reserve currencies like Bitcoin and other cryptocurrencies. And so by basically pushing those out in their country, they're trying to make them weaker across the board in the world. Now, whether or not that happens, I don't know. But the point is that China has this master plan, and the plan is to basically push the dollar away from being the reserve currency of the world. They want to take it over and thus becoming the biggest and strongest economy and country in the world. So I think that's what's going on there. But definitely that news from China hurt cryptocurrencies across the board. In addition, you have Elon Musk kind of backing off. We know he sold some of his Tesla Bitcoin position a few weeks ago. He's been kind of talking it down, which obviously he had been a huge pumper of cryptocurrencies in general, especially Dogecoin. And all of those things just came home to roost, where the market was overbought, the technicals were weakening, and then you had these fundamental factors, the news factors, and all of those kind of just crushed price into this massive drop we saw yesterday.
Okay. One thing I do want to ask you about is Like you said, mentioned there a little bit about Elon Musk being a bit of a, we won't say pump and dump, but if we take our minds back to the GameStop situation, we actually had one of the primary guys based on Wall Street Bets. He was taken to court by the SEC for market manipulation. Do you think that there's any kind of case of these celebrities, such as Mark Cuban, maybe Elon Musk, because even when you consider Elon Musk has apparently, I'm not sure how true this is, been working with Dogecoin developers since 2019. And if he's now, or 2020, however long, but if he is working with them and he's pumping up the price of Dogecoin, how, in your mind, does that fall in terms of like a financial regulatory standpoint?
Yeah, and that's fascinating because, there's one thing I said about Elon Musk, and I wrote this on Twitter, and it got a lot of responses at one point, is that, I don't necessarily think that, the pump and dump side for Elon Musk is that important. I don't think he's profiting, or it's not like he buys a huge position and then talks it up. But he reminds me of a marionette with his puppets, right? I think he almost sits in his high castle, and there's a little bit of an ego trip that comes in where he can say something and he just watches people fawn and rush in and just do anything he kind of says. And I think he gets off on that a little bit in that respect. And it's probably an ego thing a little bit. And listen, he has every right to have a big ego considering what he's done in his life and the fortune he's built. But I do think it's a little, it makes me think of like a human versus ants. And you have to realize the consequences of what you do and what you say when you become big enough. Even I myself, there's at this point in my career, I don't really push small caps too much because I do know that there's a following behind me, and they'll run it up, and then a lot of people will end up losing money. So I think I'd like him to realize that. Maybe he started to with the craziness in crypto and why he's talking it down a little bit. But I certainly think that there's an issue there. With Mark Cuban and others, I think for the most part, they have good intentions. I think they see the dollar being devalued, just like I do, where I do like cryptocurrency in the long run. Even though I called for this down move in Bitcoin and I think it could go lower, I'm a huge crypto fan long term. I think crypto, Bitcoin 100,000, 500,000 down the line is very, very possible.
Okay, and so I want to move a little bit closer onto more of the equities, because I know we have seen a lot, say relatively a lot compared to usual. But there's a nice little bridge in between the crypto and the stock world, in that we've seen that a lot of the people who got involved in stocks after this, the stimulation, TECHX, etc., they joined the Wall Street Bets community, and that high volatility of stocks was enough to entice people who, unfortunately, they're only there because of the return, but they moved into the stock market. And now with that, we saw the meme stocks that had a huge following into the investing world. We're now seeing the same thing with meme coins. Is there do you think that there will be a bridge in between those two industries? And will people from stocks move more into crypto? Will people from crypto move more into stocks? Especially when we consider that you've got things like tokenization of stocks on Binance, such as Tesla, Microsoft, etc.
Yeah, so I actually do think that is absolutely happening to some extent. So for instance, yesterday when Bitcoin was getting crushed, you saw a rotation back into gold, and you've been seeing a rotation into gold over the last couple of weeks as crypto has kind of stalled out at these highs, and then before the big fall yesterday. And then also there are certain stocks in the stock market, Plug Power, that went from $2 to $70 or whatever it was. I mean, some of these stocks that just went meteoric to the upside, that over the last couple months they've come down, crashing down. And when the markets, the U.S. equity markets yesterday were getting hit early in the day, those stocks were actually kind of neutral to positive. And I think that was exactly what you're talking about, where there are certain stocks that are going to see money flow. GameStop and AMC, I'm a little bit more kind of question marked on because they're still crazy valuations. But, you got some of these alt energy stocks to come down so significantly that they actually kind of give a little bit of a value trade almost for a bounce here. And I do think that money rotated out of the crypto market into those. So I think the same investors that are in Bitcoin or were in Bitcoin or Ether or Dogecoin, they're the same investors that will be buyers of these high growth names, and they'll be looking to kind of move money over there.
Okay, yeah, and so do you think any of that will apply into the slightly more, let's call them traditional markets, such as the bond market, which is traditionally seen as, you know, I mean, to a brand new investor, something that's extremely boring because it's not going to 10x your money within, you know, a few weeks?
Yeah, I would highly doubt that the investors who are, you know, trying to chase Dogecoin would probably go into bonds. I mean, they're generally smaller in terms of money, you know, in their accounts, $10,000, $5,000, maybe $25,000. And they're really looking, I mean, this is the mentality of new investors. And I've seen it because I have a ton of traders that come to me every single day. You know, they come to me with $10,000, and when I give them a 10% winner, they say, well, why didn't you give me a 100% winner? You know, the expectation is to double your money, triple your money, build it into $1 million very quickly. Because honestly, I mean, if you were in Dogecoin, you could have done that, right? If you were in it 3 cents or 2 cents or 1 cent. So there's this expectation for these oversized gains that isn't realistic long term. And these investors generally will shy away from investments, in my opinion, that are going to be slow and steady. Well, that's where the big money is likely headed. You know, in these slower growth stocks, high PE, high dividend stocks. That's where the big money will go.
Good. Yeah. Okay. And so, what's your kind of overview on, let's say, some of the larger indices, some of the I guess some of the major stocks that are within there? Have you got anything that you're looking out for this particular week, or anything that's been catching your eye?
Yeah, so one of the things I'm watching, and this is probably the most important thing, is that if you connect a trend line on the SPY or the S&P 500 from the March 2020 lows, and you draw it all the way up, it connects perfectly through every low. And the market yesterday at its lows had broken that trend line, and then by the end of the day, it had recaptured it, which means we did not break down yesterday below this major support trend line. If that line breaks, which basically any close below yesterday's low would do, then you have a major corrective move in the stock market, where I think the S&P could go back to, you know, 3,700 or 3,500. I know a lot of your traders focus on the FTSE. The FTSE has an inside bar bear flag. It's coming into a lot of resistance as well. So keep an eye on that. I would generally queue off the S&P for the FTSE, but the FTSE pattern is as well showing that same kind of upsloping trend line that you can watch very, very closely. So for the markets overall, I'm looking on the bearish side. I do think we will break down, even though we haven't just yet. And then overall, I think there are opportunities in individual stocks. I continue to love Viacom. I continue to love the Shanghai composite stocks like Alibaba, Baidu, and some of the smaller ones. One of my big projections, and this will be fascinating to your viewers, is that the Shanghai composite charts, so the Chinese stock market chart, is the exact same chart as the Bitcoin chart prior to its epic breakout, where it took out 10,000 last week and ran all the way up to 65,000. So I'm looking for, in the next 3 to 6 months, a major breakout on the Shanghai composite, and you'll see a lot of the Chinese stocks take a huge move up off of that, while the US kind of suffers a little bit.
Okay. Well, so apart from just the technical analysis on that side, are there any fundamentals that's backing your decision in terms of perhaps interest rates or any, you know, kind of fundamental opening from the Chinese side in terms of their markets?
Yeah, absolutely. So a couple things that I think are fascinating about the Shanghai composite, the Chinese stock market, for potential major upside, is that a lot of the same characteristics are in the Chinese market that were in Bitcoin. So, you know, for instance, the Chinese government has been generally restrictive on capital entering their stocks. They've been kind of closed off. I do think that starts to loosen over the next, you know, 6, 12, 18 months a little bit. I think tensions with China could loosen up a little bit with the US as well. And I also think that you have this scenario where investors are going to be looking for returns that the U.S. is not going to supply. So we know the Federal Reserve is likely going to raise interest rates. The Fed minutes yesterday came out, and the Fed was basically starting to hint that they are going to have to raise interest rates soon. It's going to make investments in the U.S. less lucrative with less upside. And therefore, capital, which massive capital has come into the U.S., is going to look for other markets to go. So you're going to see capital from the U.S., in my opinion, search for more emerging markets where interest rate policy isn't going to get so tight, where growth is going to go higher. You might say, well, what about growth in the U.S.? We're having this major reopening trade. That's true. But after about 6 to 12 months, that's going to tail off. And then with no more stimulus checks for citizens here and so forth, we're going to see kind of this new age growth rate, probably 2 to 3% on GDP. Investors want to find the next big move. And I do think that is going to come in terms of emerging markets or the Shanghai composite stocks.
And what's your position on, obviously, the Fed during the COVID crisis, in order to keep the markets up and keep them appealing and keep, as you mentioned, that big investor money flowing in, they begun to pump a lot of money into the stock market. And I believe, I don't know if it's still the case, but at one point, the Fed was the largest securities holder of US-based stocks. You can let me know whether that is still the case, but will they begin to unload? Is it just, are they going to crash the market? If they do, what do you think they're going to do to try and manage their own positions there?
Yeah, so the biggest error, in my opinion, by the Federal Reserve was that prior to COVID, when the economy was very good, they did not push for higher interest rates and basically, stop their infusion of money into the bond market by buying bonds. That's really where, even now they're doing 120 billion a month of bond buying. And again, they had a chance prior to COVID to kind of limit that and move it back and lower their balance sheet significantly. And they didn't take full advantage, in my opinion. And that put them in a position where once COVID hit, I mean, you really didn't have a choice. Once COVID hit, they had to step in. I mean, that's the time when you do need the Federal Reserve. I think that the multiple years prior, they could have let this market be on its own and it would have been absolutely fine. So they stuck around too long prior to COVID. My worry is they're going to stick around too long after COVID here. The U.S. is reopening. There's very few restrictions out there at this point. The economy is doing great. They could be stepping back on at least their bond buying every month, and they haven't started that yet. And I do think that that's going to contribute to massive inflation in the future and make it harder for things.
Okay, so if obviously you're currently a trader, very, very active in the market. Where is it that you're going to be looking, let's say, over the next, firstly, just 1 month, what are the immediate opportunities that you might be looking for? But then on a longer time horizon, let's say the 6 months or 12 months, what will be your priorities and what will cause them to shift?
Yeah, so good question. So there's definitely, as a trader and a swing trader, so I focus, my time frames are literally minutes in trades for a day trader, and a swing trader, I'll be in stuff for a couple months maybe or a few weeks. In terms of the shorter term outlook, if crypto comes down again into the 20,000 level, I'll start accumulating. And when I say crypto, I mean Bitcoin, but I'll start accumulating Bitcoin kind of once it gets into the mid 20,000 range now as my next level, all the way down to my potential target of 19 to 20,000. 19 to 20,000 is where I buy with both hands. I mean, that is a huge epic support. It's the 2017 technical high. So again, I don't know when that will hit, but I do want to mention it does hit over the next, couple weeks to month or so. In terms of stocks, I think you want to be generally bearish on the overall indices, but I think there are places to hide where stocks have already been discounted enough. So, like I mentioned, Viacom earlier today, I think it just got upgraded today by Bank of America. So it's up another $1.20 right now anyways. Who knows where it'll be by the end of the trading day. But, stocks where they're trading at a forward PE of 9 with a dividend of 2.5%, these levels are low enough where I think it's worth having some exposure to them. And I also think, like I said, some of the Chinese stocks are interesting. They could go down if the markets go down significantly, but I think they will respond much quicker, especially if the Shanghai kind of moves out. And then lastly, gold. I mean, gold I continue to love. I do think it's a little short-term overbought here, so I would expect a pullback to sub $1,800 an ounce. but then you just got to start buying again. I think that the craziness in crypto is going to make some institutional money rotate back to gold in the short term, which will be a positive headwind for, or a positive pusher for gold.
Good. Okay. All right. That's very, very interesting. I believe, unless there's anything else you want to add in there, Gareth. I feel like we've kind of squeezed an awful lot of knowledge out of you.
Yeah, tons to we talked about today, so that's fantastic. And yeah, I think just remember as an investor, be cautious. Don't follow the crowd. I mean, the crowd was buying Bitcoin at 55, 60, 60, 65,000. You know, be aware of that momentum. Greed is your worst, you know, it's one of our worst emotions, and it hurts us in trading. I would much rather miss a trade than chase and things. There's always another trade around the corner, folks. So you don't have to, you know, be upset with yourself for missing something. I've missed millions of trades in my career. All you have to do is catch a few good ones and you become a millionaire. So keep that in mind. The psychology of an investor is the most important thing to making money. And then obviously start following the charts.
That is very true. Very, very true. I'm glad you touched on that psychology, because yeah, that's the key thing that we can take away from all of these, the crazy volatility, you know, the psychological levels of people, you know, even Dogecoin supporters, they won't sell until it gets to $1. As soon as it hits a round figure, you know, you can guarantee everybody's going to be taking profit. But, you know, there's no fundamentals to say $1 is the perfect choice.
No, but investors have this thing with even numbers, and believe it or not, when I see that, I mean, I'm not in Dogecoin, but if I saw everyone talking about $1 and it was getting close, I'd probably sell at 98 or 99 cents, because there might be such a wall at $1 that you might not get filled. So just, you know, be aware of things like that. You know, there's no harm in selling a few pennies lower than everyone else if you're making a big profit anyways. I don't know if Dogecoin will ever go to $1. I think it's probably going to 20 cents before it goes to $1. But yeah, just remember, kind of, you know, don't let the rest of the population, the crowd, get you hyped up on something where you're kind of on the same boat. Think for yourself, be logical. Logic is everything in trading.
Good. Okay. Well, look, I wish you all the best throughout the next few sessions of your trading, and I hope that we can have you back again next week, Gareth.
Yeah, thank you so much, Ben. And if anyone wants to follow me, come to Twitter. Gareth Solloway on Twitter is a great place to follow me, and I would love to be able to put out the tweets that I do, and you guys be able to benefit off of them.
Yeah, absolutely. And we look forward to all of the content being uploaded into the app as well.
Absolutely, 100%. Have a great one.
Take care. Thank you very much, Gareth.
Thank you.
All the best.